I'm talking today with Jonathan of BitWage. Do you want to introduce yourself?
Hey, yeah, I'm Jonathan Chester, CEO and co-founder of BitWage. BitWage is the leading provider of Bitcoin payroll, invoicing, and benefit services. We've done over $120 million in payrolls with over 50,000 registered users and 2,000 registered companies. We've been in the space since 2014. I myself have been here since 2013 and was the first contributor for Bitcoin and blockchain in the entrepreneurship section of Forbes. So yeah.
That's awesome. Wow, really early adopter then.
Yeah.
Is your story, that sounds like you would be pretty partial to Bitcoin. Have you been like Bitcoin only, or is there any kind of journey there? Or
Sure. So, of course, when I first got into the space, Bitcoin was absolutely the only thing that mattered, right? I mean, everything else was just a copy of Bitcoin. No one actually came into the space, the industry at all, unless it was Bitcoin. And then, people would siphon off to these other things, right? And so Bitcoin is dear to my heart. I don't call myself a maximalist, but I keep an open mind as to like maybe something else could be valuable, but nothing is obviously valuable like Bitcoin is, right?
Mm.
That's how I look at these things, right? If you are betting on these other coins, typically the best reason to do it is to acquire more Bitcoin, because I don't see why you would sell Bitcoin for anything other than maybe buying some real estate or actually purchasing something, right? Because who wants the dollar at the end of the day? It just doesn't make sense in my mind. But yeah, so 2013 is when I got into it. Started BitWage in 2014 with my co-founder. We were looking at the ecosystem and we're seeing that there were exchanges, there were wallets, there were merchant processors, and we actually looked at the financial loop. Someone comes in, they buy Bitcoin, they then spend that Bitcoin with the merchant. There wasn't really a service to help that merchant then pay out Bitcoin to their employees.
Mm-hmm.
So there wasn't a good system in place for Bitcoin to be within its own ecosystem. And we wanted to solve that. We wanted to close the financial loop. So we came out to offer, what I like to think was the premier Bitcoin payroll solution on the market. And of course, 2014 was way too early for this. Companies were not ready to adopt this. But we knew from Reddit, because Reddit was kind of the central source of information on Bitcoin at the time, that people wanted to get paid in it. So we actually launched the first direct deposit feature on the market. These features have become much more popular with Coinbase and Strike offering these now, but we launched this back in 2000 and maybe it was 2015 when that launched, and that was quite popular. A lot of people were getting paid. What we also ended up seeing was a lot of people getting paid internationally. So we ended up building out corridors where we use Bitcoin as the intermediary to move money from the U.S. to some country in Latin America or the Philippines, so that people could get access to faster transactions and better rates. And that was leading our business up until 2020, when COVID happened, and it caused both the cryptocurrency market and the remote work market to explode. And that's what really propelled this idea of Bitcoin payroll into the mainstream. So what we're seeing today is now people all over the world, in the US and globally, are asking to get their salaries in Bitcoin. People within HR are now looking at these new innovative benefits, because A, it's actually quite hard to hire in the United States right now, and B, because of remote work, a lot of the traditional benefits of the office place don't matter anymore. And so they look at Bitcoin payroll as a way to offer remote benefits. And so now we've seen a huge growth in the United States, and I'm expecting some really, really big news for Bitcoin payroll into next year.
Yeah, this is super exciting. I like that you were early and almost too early to this idea. I mean, that shows a lot of vision. That's awesome. So how does this work? Like, say I'm new to Bitcoin. I want to get paid in Bitcoin. I come to you. How does this work? How does the money turn into Bitcoin and come to me?
Yeah, so there's two ways to do it. We have a B2B product, which is where a company offers the benefit, and a B2C product where the employee does it themselves. So I'll explain the B2C because that one's quite popular now, where essentially what happens is you sign up. Once you get approved, you get access to a direct deposit account. And you can give that to your payroll provider. You can put that on an invoice. We actually have an invoice creation system, so you can create invoices and send it to your clients. They then pay into that bank account. If it's with your payroll provider, you can actually split the bank account. So you could do like 80% into your checking, 20% into your BitWage account. That 20% then hits the BitWage account and then gets converted into Bitcoin based on your allocation preferences. So let's say this week you wanted it all Bitcoin. Next week, you actually only wanted 10% Bitcoin. You can easily just change that on the system. And then it deposits into your own personal wallet. This is the big difference between us and other systems out there, is that we're not a wallet. So if you want direct deposit into your hardware wallet, into your brain wallet, into your mobile wallet, or into any exchange, you can do that through us. You can also have splits. So you have, half of it go into your trading account and half of it go into your cold storage account. But essentially, at the end of the day, you sign up, you select your direct deposit account, you tell us your wallet, and then you get paid. That's how that works. On the employer side, it's a little bit different in that the employer signs up, they invite their workers, and then the workers tell on our system how much they want to get paid into BitWage, and then they choose the allocation there. And the big difference in this mechanism is in the B2C model, you are connecting a direct deposit account to the payroll system. In the B2B model, you're actually creating a deduction on the payroll system. So what a deduction is essentially, it's like when you put money into a 401k or into a healthcare account or into some other kind of after-tax benefit. And it ends up being reported on the employer side. So the employer gets all this analytics on, how people are choosing to use the benefits. And it ends up being approximately just as easy for the worker, but for the company, it becomes easier because on the company side, in the B2C model, they need to have like an HR or finance person often coming in, managing these changing direct deposits. Whereas we're able to automate that process so that you don't have any overhead from the HR or finance team to do this. And in addition to that, I think that it's actually better for the employer to do this because the employer then works with us to educate the employees on getting a portion of their salary in Bitcoin. On the B2C model, it's only the people who know that they want to get paid in Bitcoin that get exposed to that. But in the B2B model, the employer offers it, which means that employees that maybe had never thought of it before get introduced to it. And then maybe they, experiment by getting, $10 a paycheck into Bitcoin.
Interesting. So I guess the fact that you're not a hot wallet, is interesting. Do you have to do a lot of education in the space, or do you find that it's normally Bitcoiners that come to you?
Yeah, so today it's mostly Bitcoiners, but
Hmm.
one of the education efforts that we're going through is we're actually adding recommended wallets to our platform. So you'll basically get like custodial recommended wallets, non-custodial, multi-signature hardware wallets, And so we'll have an option of wallets, and that'll help educate people who've never had a wallet before, because we want to make it super easy for those people to get in and make these decisions themselves, while also, being part of the original ethos of Bitcoin, which is allowing people to get paid into their own bank, right? Not just some custodian that is being the bank of their funds, but allowing people to be their own bank. And I think that this is extremely important because of the new regulation that's coming out. I think that over time, it's just going to become harder and harder for you to move your money out of these custodial accounts, right? There are these laws that are going to make it almost illegal for you to remove over $10,000 from an account without you yourself reporting the person who sent it to you, right? So if you're getting paid into your non-custodial account, you never have this issue. And I think that this is important because as regulations become, more and more stringent, you're going to see the value of being your own bank more and more in the future.
Yeah, I'm interested in that solution where you're sending Bitcoin to multiple wallets. Does someone just provide you like 100 addresses, or how does this
So,
work?
so there's two ways to do it. One is you could
Mm,
like each paycheck have like a split between two different wallets,
mm,
or you could upload a list of wallets. So in the second version is more of a privacy feature where
mm.
you're like, I want a different wallet each pay period. And then you give us like up to a list of 100 and it just pays out and it switches after each one.
Mhm.
Um, another cool thing that I missed on the employer side is that that next year we're going to also launch the ability to do matching. So you can do something like, if you get up to $50 of your paycheck in Bitcoin, we'll match an additional $50 as a benefit, if that makes sense.
How
So
do
like,
how does that work?
so think about it in the context of a 401k, right? In a
Yeah,
401k, there'll be a match where they'll match like up to 1% or 2% or
yeah.
3% of whatever you put into there of your total salary. So it's taking that same concept, but just porting it into Bitcoin salary. So if the company, wants to add the benefit of, hey, if you want to get a portion of your salary in Bitcoin, we'll match $50 if you get at least $50 into your paycheck. Um,
Wow,
yeah. And
that
that's
sounds
the other
great.
big benefit on the B2B side.
But just to be clear, that's a company working that out with the employee. That's not you matching.
Well,
Okay.
yeah, of course. I mean, we're not able to do that, but um, but companies can offer that as a
Yeah,
benefit, to try to attract employees, right? Um, I think that's important.
that's pretty cool. So I guess backing up a little bit, do you want to talk more about the new competition in this space? I think all the listeners very familiar with BitWage, very familiar with Strike. What are some of like the key differences, and why, and how does someone make the decision of which, platform to use?
Yeah, I mean, I think that if you're already using Strike, you would just use Strike, right? If you have a preferred wallet already, that like if you want all your money into your hardware wallet, you would use BitWage, right? Because we're doing the direct deposit into literally any wallet that you have, whereas Strike is just that. Strike has limits. I think you can only do like $1,000 per week uh, on their first level of deposits and withdrawals, and then on their second level, you can only do, I think, $10,000
Mm,
limit withdraw. So, there's
mhm,
those limits. Those limits don't really apply on BitWage. Um,
mhm. Just
and
just to
then,
be clear, I think on Strike actually, if you get your deposit paid out, those those uh those limits don't exist. But yeah, if you're just depositing cash, there's definitely some hard limits.
yeah, okay. Well,
Yeah.
then I was not aware of that. I was just going off of their website. Um, what are some other differences between Strike and Bitwage?
So there's
Um,
no third party with you. You're kind of it's almost more private. Like, how does the IRS get involved when you're paying out directly to someone's hard wallet? Did they just on the employer side, right?
Yeah. So the IRS doesn't get involved. And because you're not having like a huge amount of assets, getting paid
Mhm.
at once, there's not like a reporting requirement, right? We don't have a custodial type of reporting requirement. Of
Mhm.
course, there are requirements to report to the IRS based on certain numbers of transactions. Like for instance, I think it's like if you do 200 transactions in the year and over $20,000 of transactions, that has to be reported. But if you're just getting paid your paycheck, you don't hit that $200 minimum, requirement. So the actuality is that we don't end up having to do this kind of reporting, but there are,
Mhm.
technical circumstances, like if you were getting paid every single day through us, that would eventually probably trigger some kind of reporting that we would have to do.
Mhm.
But yes, it's more private. It's more direct. Uh, these are the things that we think about.
So I have a lot of like some friends in Brazil who are very excited
Mm.
about your product. Where else in the world is it available?
It's available everywhere, actually. That's another
That's
difference.
amazing.
So Strike's only available in the U.S. and El Salvador, even though they claim to be available everywhere. We're available everywhere today.
Mhm.
So as long as you're getting paid in the U.S., like from a U.S. and EU or UK company, you can actually get paid from a Brazilian company and a Philippine company as well.
Mhm.
We can pay out to anywhere. So if you're an Indian freelancer freelancing to the UK, or Nigerian employee who's getting paid from a U.S. company, some people in Brazil who are exporting their services to the U.S., like all these people can get paid through our service.
Yeah, if you're as long as it's like you could pay people on the International Space Station, right? It's a Bitcoin transaction.
Yeah, yeah, exactly.
That's
Exactly.
cool. That's really
Yeah.
cool.
Yeah, again, it's part of the reason for this is because we are not creating a custodial account for
Hmm.
for these people, and as a result, we're able to work with people globally because we're just depositing to their accounts where they are.
Hmm.
And I think that that's also what's going to be important on the employer and the payroll system side, which is they need the ability to pay to any and every wallet that exists. I think that every bank, every fintech company, every phone is going to have their own wallet, right? It's just going to happen. And people are going to have their preferred wallets, and they're going to need a system that direct deposits into that wallet. And that's what we're
Hmm.
providing.
So you're building this company, you're coming on a decade here, right? Uh, how uh, how did you make the decision not to build a wallet, or like what? How did you come to that?
Mm. Yeah, I mean, I just thought um, at the time that wallets, I mean, there are already so many wallets out there that we
Hmm.
didn't need another wallet. What we needed was, essentially a new cash-in mechanism, a new
Hmm.
mechanism to, support the employer infrastructure side of this, right? Um, and it also goes back to the ethos of Bitcoin, right? I wanted to have a solution that works with people who want to be their own bank, and a lot of people around the world need that ability to be their own bank. Maybe in the United States, it's just, a nice privacy feature today. But there are places in the
Yeah.
world where governments are more corrupt, and that you can't trust the banks. Um, and it's in those scenarios that people want to get paid into their own wallets, their own
Hmm.
non-custodial. Um, that being said, I think that there might be some benefit of having a solution that um, doesn't do on-chain transactions for like below $5, right? If someone wanted to so we have a $10 minimum,
Hmm.
uh, right? And that's partially because of on-chain fees to get the money to people. We don't charge anyone on-chain fees. There's no on-chain cost.
Hmm.
We eat that. Um,
Wow.
and uh and so uh we have to have those minimums though.
Yeah.
One thing that I'd like to do is to make it to remove the minimums, but if you were to do like below this amount, like below $10, it would be like an on-chain, an off-chain transaction,
Hmm.
right? Or yeah, or a secondary layer.
Yeah. Yeah, it would have to be. There's solutions for that. That's good. So what's the business model then? How does commission work in if you don't have any Bitcoin fees? How do you grow? Is it the setup with the employer that costs or?
Yeah, so we're making money on the spread between what we're able to buy and what we pay out, which is about 1%. Um,
Mhm.
that's pretty much the business model that we have today.
Nice. So what's your like biggest hope going forward? Like where do you see BitWage 5 years from now?
Yeah, I if you take a look at just like the payroll markets in 2020, personal income in the U.S. alone was $19 trillion, and it was growing by like $1 trillion for the past few years. So in less than 5 years, there's going to be well over $20 trillion in personal income in the United States. I think that it's going to be a no-brainer for the average person to get 5% of their salary in Bitcoin, at least at that time. So we're talking over $1 trillion a year being processed into Bitcoin payroll. And my vision is that BitWage is processing, the lion's shares, the leading provider of Bitcoin payroll services, um, and paving the path, because that market needs to be grown, and we want to be part of that movement to 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 expose everyone to that. So that's my vision.
Are you guys ever responsible for, well, I mean, you must be the first Bitcoin solution some companies have. So are there any interesting companies that offer payment in Bitcoin that you wouldn't suspect that you can talk about or?
Um, so I can tell you this: only about 12% of the companies that use us are in the Bitcoin cryptocurrency blockchain sphere.
Oh, wow.
Um, but the biggest bulk of companies that use us are services companies. And when I say services, I'm talking about like human professional services, right? Marketers, developers,
Mhm.
accountants, law firms, VCs, these kinds of organizations
Hmm.
are actually the bread and butter of what does this. And I think that part of the reason for that is because of how integral people are in those particular kinds of organizations, because
Mhm.
people are the product in those organizations, and so they are seeing the benefit of offering Bitcoin payroll earlier than other kinds of organizations.
So do they seek you out? Do you have to go and present to them? Has it been a combination of the two?
Yeah, I mean, right now it's really just been a lot of people coming to us. They find us from a press release or through Googling or any of these kinds of things. So it's
Mhm.
really it's an inbound management approach today.
Interesting. How many employees do you have at BitWage?
Yeah, so we just finished raising a $2.5 million funding round. We
Mhm.
actually overextended it by 25%, and it closed. Well, we hit our funding objectives within 55 hours of going live on this investment platform called Bank to the.
That's awesome.
So yeah, really great stuff. So now we're expanding our team. From we were 10 people before, now we're about 25.
Did this happen like last week? I'm pretty sure I read this press release.
Yeah,
Is
it
this
happened
pretty
in October.
recently?
Happened in
Oh,
October.
okay. Yeah.
Yeah.
Okay. Cool. Nice. Um, so what is your hope? I mean, you said you didn't call yourself a Bitcoin maximalist, which is understandable, but I'm kind of interested. Do you see like a competing marketplace of Bitcoin and crypto, or do you see them as completely separate asset classes and you're only interested in one of the other? How does that look to you?
Yeah, so I see them as completely different asset classes. I think that
Okay.
CoinMarketCap does a complete disservice to us by having Bitcoin at the top of like a bunch of cryptocurrencies, right? Um, because really Bitcoin is trying to be money, right? And you have
Mhm.
Ethereum here, Ethereum is trying to replace AWS. Ethereum is AWS, Bitcoin is money. Why do you benchmark AWS against the dollar? It doesn't make sense, right?
Mm-hmm.
Dollar market cap is this, AWS market cap is that. When is AWS going to, move past the dollar market cap? This is the conversation that people are having today, and it makes absolutely no sense. And I think that a big part of that is how, people look at these services like coin market cap. When really, you've got money, which is Bitcoin versus dollar, pound, maybe, gold, treasury bonds. Then you have the AWS competitors. So you got like Ethereum, BSC, Cardano, whatever. Then you have, all the stocks that are, skipping, that are able to skirt SEC regulations. And then you have the memes, right? And then stable coins. I wholeheartedly believe in Bitcoin. I see how censorship resistance truly, adds value in the circumstance of money. I'm willing to believe that there could be other applications of censorship resistance outside of money. But I haven't been overly impressed by what else is out there. But at the end of the day, I think, like, what is the main innovation that Bitcoin brought to this world? And it's digitally enforced censorship resistance. And I believe that it's possible to, move that benefit into other places. But the thing is, you take Ethereum, and people talk about how it's, revolutionary because you're removing intermediaries. But if you look at the example of Uber, right? If you were to put Uber on Ethereum, that would be an incredibly inefficient platform, because, like in Poland, it can cost $3 to take an Uber ride. So if you're paying $3 to take an Uber ride, and then you're paying $30 to the Ethereum blockchain, that is much less efficient than working directly with Uber, which, you're paying, I don't know, 50 cents instead of $30, right? And Ethereum and all those sort of AWS competitors are promoting themselves in a way that makes them say Uber would be more efficient on their system, right? And this is, the classic misunderstanding of everything that's happening over there.
Yeah.
And why it's totally overvalued. Maybe decentralized exchanges have value, right? If they were to trade things that themselves also had value. But
yeah,
it's just, I think that there's a lot to be seen. My entire belief of what's going to happen over there is because that fundamental misunderstanding is so popular that it's going to create this huge, massive bubble that's going to affect a lot of people's lives when it turns out that this assumption of how the technology works is completely wrong.
And maybe that perhaps that what they're doing is criminal. I mean, not to put words in your mouth, but AWS is an interesting comparison for them, because they're riding in on the coattails of Bitcoin as if they had a chance to offer like property rights to people, like ungovernable, unconfiscatable property rights, and that's just not the case. That's how I kind of differentiate the asset classes, right? And so what you're left with is basically unregulated issuers of fiat at the end of the day, right? I don't know how else to put it, really.
Well, the thing, at least when I think about Ethereum specifically, is that if you look at Bitcoin, it makes sense that they have a limited supply. But if you look at Ethereum, it actually makes sense to have an unlimited supply, because, if you look at what they're trying to do, they're trying to just be a decentralized AWS, and you need an infinite amount of, ability to do transactions for that to be valuable. If, you had a limited supply, eventually you're going to just not, you're not going to be able to be the world's, supercomputer, right? So they're going to have an infinite supply. It's just what's going to make sense. And because that's what makes sense for their vision. so then comparing Ethereum to Bitcoin, continually doesn't make sense because Bitcoin is designed in a way where you need to have a limited supply, and Ethereum is designed in a way where you need to have an unlimited supply. So that's how I see these things. And of course, you can issue tokens, unregistered securities on them. You can issue tokens backed by currencies on them. You can issue all sorts of stuff on this system. But at the end of the day, does censorship resistance really apply or matter to a lot of these things? I do have a somewhat positive view on stablecoins, actually, and the idea there is that there are two main barriers to entry for Bitcoin: volatility and private public key cryptography, right? So, a lot of organizations are trying to solve the issue of the private public key cryptography. So you have these custodial wallets, so you can get exposure to Bitcoin. But the problem is that going from that to public private key cryptography is extremely hard. But if you have stable coins, people are learning about public private key cryptography and are using it. And so when people learn about that stuff, then it's actually going to be a very easy switch to Bitcoin, because there's just going to be a point at some point in the future where it's just going to be obvious to choose Bitcoin over dollar. And if you already know public private key cryptography at that point, it's like, boom, you're just pressing a button on a screen. As opposed to, you have your Bitcoin, now tyrannical governments are everywhere. Well, how are you going to get your money? If it's all on custodial, you're not going to be able to. It's going to get stuck. Yeah.
That's kind of like, if I understood it right, that's similar to my argument for why futures ETFs are actually good for Bitcoin, even though they really have nothing to do with Bitcoin, right? It's good for adoption. It's an opportunity for education, and it's a way for people, at least temporarily, to experience a little bit of the upside volatility and to enjoy some returns that might make them interested in continuing their education in the Bitcoin space. So what else do you see that's happening right now? Like, what excites you about Bitcoin? We've been, sideways action, we're like 2 weeks back, or 1 week since the last all-time high, and people seem to be bored already. So what's exciting you?
Well, I have this belief that as long as there's volatility in Bitcoin, that we're still very early, that the end game is this like really boring, stable asset, right? Where, today, price swings of 10% are, can happen. But in the future, it's just going to be this sort of, slow, boring monolith that all it's really doing is it's absorbing value that's created, and it's countering inflation, and that's going to be a much slow burn, a slower moving thing. And what I like about that future is when we get to that point, your decisions on how you use your money are going to be different. Today, if you don't want to lose money, you have to take a risk with your money. You have to risk it by investing in something, right? But or you lose money due to inflation. But in that world, when Bitcoin is sort of this, really, really boring, slow moving thing with some positive CAGR, that will be your low risk bet. It'll be like putting your money in cash, but your cash is making money for you. And so people are going to be, able to not have to take risks, right, in order to get to that value, which I think is important, because in the stock market, there are winners, but there are losers, right? But at that point, you're just gaining, the value of what's being contributed to society.
Yeah, it's kind of like everything they promised us savings accounts would be, paired with like if that savings account was a sovereign wealth fund for anyone. It's like your own offshore bank account.
Yep. Yep. Exactly. I mean, that's what really excites me. I mean, obviously, there's all the classic stuff like Lightning and Taproot and Liquid, right? And sort of these secondary layers. Um,
Hmm.
we have MasterCard and Visa as like the centralized secondary layers that are coming into play as well.
Yeah.
I believe that we're going to live in a world where we have competing centralized and decentralized secondary layers, like we have custodial and non-custodial wallets on the base layer that people need to
Hmm.
use. So the centralized ones are going to be like Venmo, Visa, MasterCard, all backed by Bitcoin, allowing you to do transactions around the world. And decentralized are going to be like Lightning and Liquid, for those that need or want their privacy and the control over their money.
Yeah. A lot of great things happening in Bitcoin right now. Do you have any advice for someone just coming to Bitcoin, or alternatively they're new to Bitcoin but they're interested in getting paid in Bitcoin because they recognize the value proposition?
I mean, if they're looking to get paid in Bitcoin, I recommend them signing up to BitWage. But
Yeah.
and also looking into some cool wallets to use. I think that using like a really sweet, easy to use mobile wallet, non-custodial, is a great way, or multi-signature. Something like Casa or BRD or Zengo or any of these kinds of wallets, as a way that makes it super easy. If you lose your phone or forget your password, they have ways to help you get your money back. So I think that's a good place to start. Um, I think that a more important thing to talk about is just someone who's trying to get their feet wet in crypto in general. Too many people come to me and are like, I just bought like some shit coin, and I'm like, do you have any Bitcoin? And they're like, oh, no, like I'm looking for the next Bitcoin. I'm like, no, what you don't understand is that Bitcoin is the least risky way for you to get multiples on your money, right? So you should be at least allocating some portion of your portfolio in crypto to Bitcoin,
Mhm.
and making sure that people who are getting in for what I believe is the wrong reason, are still led on the path to Bitcoin, so that they can experience it, understand it, and have an opportunity to then want to educate themselves.
Yeah, that's a really good point. I think just anecdotally, I got lucky, like surrounded by the right people, so my shitcoinery path was curtailed to like 3 or 4 months, and before I recognized like Bitcoin's it for me. I don't, I'm simple. I don't need all these complicated like other securities or fancy, trading methods, options, none of that. But that's not the case for everyone. So if you allocate just a small percentage of your portfolio to Bitcoin, I think we're early enough that you'll find that that small, 5-10% will become 80-90% within a matter of years.
Yeah.
Yeah.
Yeah. I mean, I agree, right? I mean, on the low side, we have Bitcoin as just like a competitor to gold, right? This is like the low side. Bitcoin hitting like 250K a coin, and it's now worth half of gold, right? But you know, you could also believe that it's going to completely obliterate gold, obliterate the dollar, and become the main world reserve currency. And at that point, we're talking, $1 million a coin. So where are we today? We're at like 60K, a little under 60K. It's still huge gains. And but at the end of the day, I don't like to focus too much on the gains,
Mhm.
because sure, if you do it now, that you're going to get a piece of that. But the reality is that it's not just important now, it's important when we're there. when we're already at the 250K or $1 million a coin, right? Because Bitcoin will still have value as an anti-inflationary asset. And I think a lot of people are not, don't truly understand that. And I think it's an important thing for people to understand, an important piece of the education.
Yeah, absolutely. Do you have any closing remarks on behalf of BitWage or Bitcoin in general?
Let's see. I guess closing remarks on BitWage. If you want to check us out, it's www.bitwage.com. We host the Twitter Spaces 1 to 3 times a week. So I'm sometimes on there. My head of marketing is on there, and we just chat. Sometimes we had like the CEO of Wasabi Wallet come on for those privacy folks. So sometimes we have really cool guest speakers. So check us out.
For sure.